Hi everyone, this is Parincha. Hope you are doing great today. Today's topic is Union Budget 2021 Expectation. Finance Minister Nirmala Sitharaman is all set to present the budget on a 1st February. This budget will be more challenging than the previous one as coronavirus dented the entire economies in the world. All eyes are on FM Sitharaman to announce some remedies, grants, and relaxation for their particular sectors. She has promised for a never before like union budget as the Modi government looks to give further boost to Indian economy. Our broader expectation would be way forward budget on the vision of Honorable Prime Minister, making India Atmanirbhar Bharat, vocal for local. Here is the expectation left from the industry people as well as from the common people. We all are looking for the promotion of export. One contrary thing that now we are looking that foreign investment must come in India. So any foreign company want to invest in India, they will definitely do a sales promotion and business development activity. If such activity undertaken by Indian supplier of service is not export, being intermediary services, hence GST leviable. So GST provision going contrary when we look at the government vision and government policy. When we are inviting foreign companies to put their investment in India and they want to get their business development activity done, sales promotion activity done, and that by Indian supply of service, why it is intermediary? And this provision is copy paste provision from service tax from 1st October 2014. Should we look into the government regional policy must sync with the taxation policy. As part of the ease of doing business schemes, the government should come up with the roadmap where the taxpayer will be filing a single return at a periodic intervals rather than filing different returns for a different departments at a different periods. This will in turn also bring in more FDI into India. MSME contribute about 29% the Indian GDP. And with the rollout of GST to boost the revenue from GST, the government should adopt the carrot and sticky theory. It should reward the honest GST taxpayer by way of refund 0.5% to 1% of taxes paid and at the same time punish the errant taxpayer by imposing hefty penalties. My second suggestion would be there need to be harmonization when we look at the transfer pricing. When we look at the custom law versus income tax law, when we imported goods for related parties, what we have seen, the custom authority always look at increasing the price for getting more custom duty, whereas income tax department doing contrary, reducing price to get more profit for income tax chargeability. When it is arm length price and it is being decided by one authority, it should be applicable to other authority as well, vice versa. My third suggestion would be the local manufacturer who are importing raw material component or inputs meant for manufacturing purposes, they are paying basic custom duty, social welfare surcharge and IGST. Credit of IGST is available, but there is no credit for basic custom duty and social welfare surcharge, which we want either should be done away with or credit should be made available to create cost competitiveness versus pricing when we import goods. This is very much important, otherwise, an alternative we can follow IGCR route, import of goods under concessional rate of duty for a local manufacturing. And this suggestion is always on the line of vision our Honorable Prime Minister making India Atmanirbhar Bharat, vocal for local. My fourth suggestion would be we don't want any kind of double taxation. When we look at the custom law versus GST law, very recently one of the burning issue when we import on a CIF basis, cost insurance and a freight, when we pay custom duty including IGST, At the same time, the GST department is demanding IGST on a freight component, on a which already we have paid IGST including custom duty at the time of import of goods. My question is, why double taxation? Department is saying credit is available, but there may be a case credit is not available when we talk about import of exempted goods. And second, it is accumulation of credit in the hands of taxpayer, working capital gets blocked, and Honorable Gujarat High Court in the case of Mohit Mineral already held that this is IGST levy on a freight component is ultra vires. But department has filed SLP in the Supreme Court, matter is sub judice. My fifth suggestion would be, as a broader perspective, the fund we have seen challenges in a refund. We are not getting on a time, and the second problem with the refund, it is rate of interest on a delayed refund by the department is 6%, as against 18% rate of interest which is to be paid by a taxpayer for a delayed payment of taxes. Why there would be disparity? It should be at par. My sixth suggestion would be, it is out of GST, petrol, diesel, natural gas. It shouldn't feel the need and necessity of any manufacturing sector or service sector. So whatever taxes which is pre-GST, taxes paid on this 5 specified petroleum product, credit is not available in GST. The team creating cascading of taxes, government must look into the phase manner, inclusion of these items into GST. Maybe start with the natural gas, aviation turbine fuel, petrol, diesel. My seventh suggestion would be low tax rate for partnerships and LLPs. There are MSME consisting of partnership firm and LLP who pay tax at 30%, excluding surcharge and education cess, while the government has conferred a tax rate and tax rate cut on a corporate and manufacturing companies. The other form of business, enterprises still pay high tax at the rate 30%. The government could reduce the tax rate for the business enterprise to create level of playing field among MSMEs. My eighth suggestion would be saving boost for individuals. Instead of tinkering with the tax slabs, the finance minister is likely to give a tax relief to encourage people to buy homes, especially in affordable segment. The finance minister is reportedly mulling hiking exception limit under section 80C from 2 lakh from to 1.5 lakh. Section 80C accounts for most of the tax saving of individuals. It includes investment in a government securities, LIC, mutual funds, ELS, along with the payments for children tuition fees and housing loan repayment. All under the overall limit of rupees 1.5 lakh. The limit under section 80C was last enhanced in the budget of 2014. Education cost and housing loan repayment form a significant part of financial commitment for an individual. The section leaves less from room for savings. The government could enhance the limit under section 80C to give much needed boost for public savings. Thanks for watching. Please let me know your expectation from this budget 2021 in the comment section below. Please hit the bell icon so you will never miss an update from our channel. Please also do subscribe before you leave. Jai Hind.